Hey everyone, this is DayTraderRockStar, and tonight I'm going to do a little educational video and talk about an anatomy of a trade, or how to read a trade, how to scale into a trade. Lots of times, when I do trading, I have a method where I scale into a trade. I have a certain characteristics of stocks that I look for in trade, and with those characteristics gives me probability chances. So if I have a good probability of a successful trade based on my indicators and stuff, and everything pulled back properly, then I'll take a bigger position. If I feel that the stock hasn't really maybe formed its pure pattern, but I am not 100% sure, and I think in the medium term it's very bullish, then I'll start a smaller position. So sometimes I break it down into quarters, sometimes I break it into halves. And if a normal position for me was 400 shares, I would start with 100 or 200 shares. Then if it came down, and this is an example of what we see right now, APH. So my plan for this: knowing the stock, you do your research on the stock, you make sure the company is a quality company. There's nothing really reason for why this wouldn't push back up towards the highs and continue to go up higher. The earnings are there, everything. It's a growth company. It's really a first pullback on this real nice trend. And what we like here is the oversold stochastics. So we have something going for us. We have an area where we've been bouncing off down here and seeing a nice down, but we just kind of bounced up and then pushed back down, and now we're hanging here in what appears to be a wedge pattern. And because it's a wedge pattern, you tend to trade this trade to the upside in a 75% area of it, which might be from here down to here. All right, so that's where you would look for that breakout. But again, this is a quality stock. It has a pretty decent pullback from the highs of 59, pulling back to 52. 200 period moving average right underneath us, and a channel or a wedge pattern always has a secondary pullback area. And this is all about the anatomy of the trade. What I look for when I'm looking at a trade, I'm looking for the probability of getting an upside move versus a downside move. And in this market, that's all you need, that edge. You can't really take anything else for granted. You can't take analysts' comments for granted. You can't take anything, you've got people on the news. You have to really come to an educated decision, and education will get you half of the way. Science, probability, lining things up properly and to get the best shot will give you the longest life in this trade. So one thing I want to do is measure this out. So I do like this. So that tells me I'm probably going to scale in just to get in it. So if I'm going to have 400 shares on this, I'll probably start with 100 shares. All right, and understand, if it does move up, all right, great, fine, I'm in the trade. My hunch was right, or it just moved here. But if it moves down, I also know now that I have I have that channel, that line down here. If I take this little pivot area, and a channel and wedges start from pivot areas, I want to take that from the closing price and kind of extend it out here and say, all right, this is really a channel now instead of a wedge pattern, and that would be my target down in this level, right down here. And that's exactly where that 200 period moving average is. All right, so we're looking at just in a gray area down there. We're looking at price now here, which we're trading at right around now, is around that 52.60 level. All right, so if you took an entry there, and then down here off that 200 period moving average is 50.93, so we'll call it 51. So about $1.70 range here, $1.70 range. So 100 shares there, and it does look like that. We also sometimes want to go out to that 60-minute chart and see that, all right, wow, look at this. The stochastics here are a little bit overbought. The stock here hasn't moved. This is more of a negative divergence, so it's not giving me any confidence of that pop. So again, maybe I'll start off with 50 shares. Really depends on your scaling, on the confidence and how the pattern's set up. If this was a multiple indicator setup, you might start off with 300 shares, but it's not. It's in the middle, but I do like it. So that's what I'm saying. You come to interesting scenarios all the time in the market, and you have to have a methodology. So then you have a move down here, and this is a very aggressive move, a very bullish move for me. It would be a multiple indicator setup. It would be a lower trend line support out of a channel, recognizable pattern. You can see how this hit this channel line. Everything comes into order here, this line to this line. even though this right now is right now this is a wedge pattern, but if this breaks down to this level, that would actually break through that wedge pattern. A lot of people would get scared out to see this bounce right here, which ends up being that channel and the 200 period moving average. So that 51 area all around that level is a very bullish area. Now the reason I put this great area in here is like, now this starts to get my profit area, my risk reward area, and you know, the probability of the trade getting better as the price moves down, because you're always going to look for that bounce back up towards that 20 period moving average. So again, quality stock on a pullback, most likely your risk is also pulling back, and the better your chance you're going to have for that move in your direction that you're taking it. Very, very good, because the closer you get to this line, the better you want to have that trade. So basically that's it. And again, downward channel, you're looking for a break to the upside, and you know, even if you got a bust down here, probably good chance you're going to come right back up to that 52.68 level. So you took that little entry there, you took that entry here, it brings your price down halfway. All you need is that little bounce and you're in positive territory. Then you got your $1, $2 trade in the bag, just on a retracement to this upward trend line. So you're staying within the trend. You're taking your scale in here just in case it do breaks out there, and you add to it down here. You actually take a bigger position here, so you drop your cost average down right next to this trend line, and then all you need is now a bounce through this, and you're in the positive territory. And even if it starts moving around this way, you're really in a good shape, because this pattern tends to break out to the upside anyway, and then we start to move up. So that's the scaling process. That's how to, the anatomy of a trade. Planning your trade out, understanding that this would be, something that you would do with each and every trade. Now I put out a 10 for 1,000 watch list, and that's what I want to do to each and every stock. So when I go into the market on Monday, I know what happened. I know exactly what I want to do and why I'm calm in the market during these levels, because this is already planned out. I've talked to everyone about it. I've studied this for the last 8 hours. This stock, the next one, what am I going to do with the Yum Brands? What am I going to do with the Corning? All these have the same scenario. All right, what happens if it breaks down here? Well, then I would add here. So I know the different levels that I want to start off with and where I'm looking to add at. And that comes with experience in each individual stock. I don't think there's a set rule to determine that. And it would be easy enough to say, hey, yeah, a breakdown, a deviation of whatever from the moving average gives you a bigger entry level. But to make it a little more easier, the higher probability to set up, that means more the convergence of the indicators, I would take a bigger position. Something that's bullish but not there, I would scale back my position, add to it down here, and then you're usually in the money. So that's the scale back. Hope you enjoyed that video.